Howdy Wall Street Willie, what are the advantages of options? The biggest advantage is that the option buyer has the right, but no obligation, to exercise the option. This means they are not locked into the deal. They can wait and see how the market plays out, and only move forward if the trade is favorable to them. The potential loss to the buyer is limited to the premium paid, since the buyer can always choose to let the option expire. Another benefit is leverage. For the same amount of money, the buyer gets exposure to a lot more shares than if they were to buy the stock outright, as they only have to pay the premium upfront. With the large contract sizes, small movements in the stock price in the right direction can have magnified returns in a short period. Also, options are very liquid assets, meaning they can be quickly sold to generate cash if needed. What are the disadvantages of options? Options are highly volatile and prices can move substantially even within the same day, making them very risky. The leverage is a double-edged sword. If the underlying asset moves unfavorably, the losses are magnified too, meaning you could lose your entire investment very quickly. Options have a finite life after which they expire, so they are not good for buy and hold investing. Also, if the option expires out of the money, the buyer loses their entire investment. Is options trading right for me? Despite the advantages, options trading is far too complex, expensive, and risky for individual investors. Options are complex because they require a very high level of skill and knowledge to trade effectively. Traders must look at a great deal of different factors and be able to make quick adjustments to their portfolio based on market movements. Also, options are extremely risky investments. Because of their leveraged nature and the difficulty of anticipating price changes, option prices are extremely volatile, and investing in them comes with a very high possibility of losing money. Lastly, options can be very capital-intensive investments due to the contract size and many high fees involved. All this means that options trading should only be done by experienced professional traders who can manage the risks and complexities and have enough capital to withstand big losses. Thank you very much, Wall Street Willie. You're welcome, Super Cooper. Remember, finance is your friend.